The first trend that the market formed was a bearish downtrend, and shortly after, market indicated signs of reversal, and there was a brand new bullish uptrend that was forming. Now, me as a trader, I need to ask myself a couple of questions, and the first question is whether it is okay for me to expect this bullish trend to reverse the course of the market and to continue working higher. Is this going to be the dominant pattern for the rest of the day, at least for this particular time? And the answer is yes. And how do I know that? It's because the previous downtrend played out with the trendline rule, because I can see that there's a nice key entry point, the channel is confirmed, there's a close outside of the channel, which is a break, and traders retested the latest extreme and downtrend formed new extreme. And this means in price action that the trendline rule played out, and after prices strongly pushed above EMA and the exponential moving average kept holding here, 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 you can see so many high highs, so many high lows, and market consistently and gradually keeps working higher. So we can consider the downtrend played out, the trendline rule was fulfilled, strong push above EMA, and a brand new channel is starting. So right now, the market bias remains bullish, and I'm looking for high probability setups to go long. I don't want to buy just anywhere on the chart. I need to buy high probability setup. And what is a high probability setup? Well, it would be a variation of a two-legged pullback at the key entry point. We can see there are two high probability setups on the way down. You can see the larger two-legged pullback here and larger two-legged pullback here. Here it formed at two key entry points. This is where the correction phase will end. And you can see another repeat pattern, the larger two-legged pullback. This is where the correction phase will end at the key entry point. So I'm looking for something similar. Okay, we have a new high, which means I'm going to reset the count when I'm counting for my long setups, for long entries. First attempt to go long, pullback, second attempt. But there's still a gap between the EMA and the signal bar. I don't want to go long just yet because it is not fully touching the exponential moving average. Also, it's getting a little bit stacked, a little bit congested. You can see multiple bars stacked right next to each other, indicating small trend range. Okay, so what I'm going to do now, I'm going to draw small little trend range. So you can see we have congestion. And I don't want to be trading inside this congestion. What I want to do is I want to wait for prices to break out of this congestion first, because most breakouts of trend ranges will fail. And this little congestion is nothing more than just a smaller version of a trend range. Just a lot of price swings, swinging up and down, up and down, up and down. Prices are bouncing off the lows back to the highs and vice versa. You can see that the prices are pushing lower. Okay, we're breaking lower. Am I thinking about selling? Not really, because it's just the first break of the uptrend. And just like we had a break here, I expect for prices to retest the latest extreme. Here we retested the new low. So now we have a break. So I expect for prices to retest the new extreme. My bias still remains bullish. Okay, prices are working lower. And notice what we have. New high, first entry long, pullback, second entry long. Downtrend played out with attempt to create new extreme. You can see I can monitor even the shortened channels, and this is the failed breakout out of this smaller trend range. You can see prices broke lower, sellers are getting trapped and then push higher. And you know, a lot of sellers are gonna get trapped selling this lower high above EMA, directly into EMA, while the uptrend is in place. So this right here is a second entry long and a failed breakout with the direction of a trend which is bullish. However, when I'm deciding if I'm going to take a setup, I also want to make sure the signal bar and the overall behavior of the setup fits the criteria. And here I can see that the signal bar, look at this, half of the body is a bearish stem combined with this stem right here, this stem right here. So overall it's getting a little bit neutral, a little bit stacked. So context wise, me looking for second entry long makes sense. The failed breakout adds more confidence that we're going to reach new high. But unfortunately, the way it formed is just a little bit too cluttered, and you can have a fake out. So I don't really want to take this setup just yet. You can see market continues working higher. Okay, so now that I'm observing the structure like this and EMA holding nicely here, I can actually notice a little bit of a better pattern, better uptrend. And this is what you're trying to do when you're observing price action. You're always trying to make sure you find your best pattern, because there's always a pattern working. These candles, they're always following a pattern. They're always following a channel. And you can see, because now you can see after prices bounce off the EMA kept holding so nicely. Basically never closed below from this very point after you push up EMA. Notice what is happening here. So many geometric formations. And this allows you to spot kind of like a spike and a channel pattern, just because you have so many confirmations here. Here, 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 and here. So I'm just going to mark it here. You can see how many lows are confirming the beginning of the channel, and it's getting confirmed even here. So this was the spike and a channel that I applied when I was observing the price action like this. And if you're unsure if this spike and a channel is valid, just observe the EMA. EMA will always be the last indication to give you the clue what is the current bias. You can see strong bullish reversal back up. So this is a great sign for bulls. Notice the downtrend working lower, close outside, created new extreme, and a strongly reversed back above the exponential moving average at 2 key entry points. So this pattern right here confirmed the spike in a channel. The EMA kept holding. The downtrend played out with the break new low. So you know that it is okay to go long. And this would be first semi-decent high probability setup. This would be high low to this second entry long. You can see you had congestion. Prices broke higher. Most breakouts will fail. Prices came back, tested the congestion, and you also have 2 key entry points and a decent bullish bar. So this is just a first entry though, because counting from this high, it is just a first entry. Me personally, I didn't take it, but a more aggressive trader can take it if you got the spike and a channel in play, because it is at 2 key entry points. You came back and also tested this previous congestion, kind of like a breakout pullback, key entry points are holding, and a tier 1 signal bar. The way this signal bar closed so strong, it's a good sign that this spike and a channel is valid. Okay, and now we can see that the prices are breaking the trend channel line, which means this right here is overshoot, which I'm going to mark because I have a confirmation here, confirmation here. So overshoot means unnatural activity. It's overbought. I don't need particularly to observe RSI. I don't need Bollinger Bands. All I can see is just observe the price action, steep bars pushing higher, getting far away from EMA and breaking the trend channel line. So now that I'm watching overshoot, there can be stronger bearish momentum that can lead, according to price action, to possible break or straight up reversal. So once I see overshoot, it can continue pushing higher. Eventually, I would make the channel wider if the overshoot would get negated and you keep pushing higher, keep pushing higher, keep pushing higher. However, I don't know what's going to happen right now. What I need to observe is to lean more towards creating stronger bearish pressure, because I can never go wrong with that. I can get burned easily ignoring the overshoot. Okay, so I don't want to go long just yet because I'm focusing on overshoot. And you can see market is slowly, strongly breaking to the downside. Okay, so this is pretty good. Overshoot leads to a break. However, I still expect, according to rules, to reach new extreme even after overshoot. Overshoot can lead to reversal, and just like last Friday, we saw the overshoot reverse the market. But 90% of the time, you still want to follow the main trendline rule, and you still want to expect for prices to reach the new extreme. And how do you know when it is okay to go long? I cannot go long just yet. We're below EMA. And notice 3 big consecutive bullish bars pushing above EMA. Another big bull bar. So at this point on, it's clear that you're going to make new extreme, because you basically retrace the entire bearish correction. You're back up above the EMA inside of the channel. And according to rules, you need to get new extreme, new high. Because just because you see a break, you're not selling. Just like here we have a break new low, here we have a break and expect new extreme. So you're expecting high probability setup, high low, or failed second entry short. We never get none of this. We have high low here, but notice how far away from the exponential moving average it's forming. It is so close to these highs, the smaller resistance. It would have been great had the high low formed somewhere around this area near the EMA. So the same thing with failed second entry short, not even touching the EMA, so far up. Even though I'm expecting these setups, they never really form according to price action rules. So I just have to sit here and watch market go without me. Okay, so now I have new extreme according to trend line rule and price action. And all I need is just to follow the price action. You can see trend down, break new low, trend up, break new high. So what am I expecting at this point on? I'm expecting for prices to right now, at minimum, correct. Okay, because the buyers retested new extreme. I have a second entry long. I'm not interested. I just have a break and a new extreme. So there's a time for correction or possible reversal. I just need to observe the market and be patient. So don't get lured in. Don't listen to your common sense thinking, look, we observed the market go higher for such a long time. I was afraid to buy here when it was unclear. So now I'm going to buy the two-legged pullback at the very late stages of the move. So this is what can happen. Don't get trapped following your common sense. And notice what you have. So I'm going to redraw the downtrend. I have a new high, first entry long, pullback, second entry long failure. It didn't push below EMA, so I can't really just risk the short just yet. But notice we have a lower high, confirmation of the failed second entry long, and a lot of late bulls must have gotten trapped here. Now, had this lower high closed below EMA, it would have been a great trap, still closing inside the channel. You can see how these tails at the top are indicating bearish pressure, and the trend line is allowing you to, fit the candles inside nicely. So this is a great lower high, confirmation of the failed second entry long. I will mark it aggressive wise because this was super tempting. Because a lot of bulls must have gotten trapped here, going long after breaking new extreme. You need to be quite experienced. Generally, you want to see prices pushing below EMA to be a little bit more sure that the market will reverse. And look how big spike it created. This just goes to show you how strong of bearish momentum this was. All the late bulls, all their stops got taken out. Okay, we are testing the EMA, we're testing the trend line, and we take one tick higher and reverse down. Now I can reset the count and treat this as another failed second entry long. We have a new high, first entry long, pullback, second entry long failure. A new high, first entry long, pullback, second entry long. Kind of like a two legs here and two legs here again. Because we have a first leg here, and then we have first leg here, first leg here. So I treated it as a failed second entry long. I actually took this trade myself. I took it on engulfing because it ticked one tick higher. Two key entry points held. The trend line held, the EMA held, and a strong bearish momentum down. I put my stop order below and prices continue working lower. If you're waiting for this bar to close, it's too late, it's too big. Had it close in the middle, you can go short, but by the time this bar closes, you're basically a little bit late to the party. So you can't enter this late. And market continues working lower. Now, you definitely can't short here because market is far away from EMA. Same here, market is far away from EMA. And notice prices are working lower. So far, price action rules are working perfectly because each channel reversed after new extreme. So now we have a brand new downtrend working lower. So I'm just looking for high probability setups. Now you can see I'm skipping through because we are not touching the EMA. I always want to see prices go closer to the EMA. Sometimes if the trend is strong, you can take setups that are a little bit further away from the EMA. The context needs to be good and your experience needs to be there. But right now we are still not touching the EMA. We're kind of pushing lower. So I'm just sitting on my hands. Notice I'm not chasing the market all the way down. I could easily mark all these setups working lower. Problem is, next time you will take it far away from EMA, you will get trapped. You'll be wondering what's going on. Because just because it's working here once, doesn't mean that the next time you see the structure is going to be a little bit different. It may not work. So you always want to wait for prices to fully come to the key entry point to give you the clue that the key entry point is holding. Okay, we're breaking the channel. So what am I expecting? Second entry short. Okay, I have a first entry short. I would like to see second entry short. Small little pullback, something like this. Can we get it? No, we have a second entry short here, but it's a bullish bar far away from EMA and way too far down. So no real way for me to enter. And we can see market keeps working lower and keeps working lower. Okay, you have a new low, but notice what's happening, okay? And notice how far you're pushing after new extreme. At this point on, once I'm watching this, I'm expecting for prices to reach the low of the day important key level. These key levels are a lot of times the target in prices, and we are playing the big trend range, move down, move up, move down, and we also have the major move down here. So you may expect potential measured move, the measured leg down here, because on a higher time frame you will just see one big leg, little correction, and the second big leg forming. So once I was watching this, I decided to use still a couple of these matching highs and select a little bit wider channel, something like this, which you can see has overshoot again. Notice how far away you're from EMA, and notice how far you're pushing lower. This is why at first I like drawing the channel So I'm not interested in selling. We're so far away from EMA. We're so oversold. You can see this is why the market reversed strongly to the upside, because market oversold strongly. There was not a single pullback to the EMA. I'm going to redraw the uptrend. Okay. Okay. We have a new low. First entry short, pullback, second entry short. I'm not taking this. We're above EMA. Horrible bar, doji. This uptrend may get new extreme. This is just the first leg up. Not interested. Two sideways, horrible bar. After overshoot. Can't take it. You can see market continues working higher. Okay, and we have a larger two-leg up pullback. First leg up, pullback, second leg up. So at this point on, I'm expecting for prices to create a new extreme for the downtrend. I cannot just pick a top just yet. I want to see felt second entry long. Can we get a felt second entry long below EMA? Okay, we're pushing below EMA. And market is pushing back up. Okay, so when I was actually watching this live, it kind of confused me. I was even looking for potential channel like this, which I shouldn't have, because I identified this downtrend first and I was supposed to be following my instinct and going with this downtrend and not really drawing this channel. Because if you're drawing this channel, your bias is too bullish. It's not supposed to be too bullish. You expect the second leg down. This was a very substantial push. You expect the target to be the low of the day important key level. Okay, market keeps pushing. And notice how strongly market is breaking below EMA. Okay, so at this point on, you can make the analysis that it can be first leg, pullback, second leg. So it was a larger two-legged pullback that had the first two legs here. There is no setup regardless. Even if you're watching longs, everything is far away from EMA. Even if you're watching for shorts, you can't take anything just yet as well. But now you can finally see that the bearish bias is resuming. A larger two-legged correction played out, and you now expect for prices to reach the new extreme for this downtrend. And overall bias in this market is still getting a little bit bearish because each new major low is lower than the previous one. This one is higher, this one is higher, and this one is higher. So you can see somewhat of a bearish imbalance forming. So I'm just waiting for a good high probability setup. We're pushing above EMA. We're drawing the uptrend. We're strongly pushing below EMA, and we have second entry short. New low because there's a micro level bottom which resets the count. First attempt to sell, pull back. Second attempt to sell. Second entry short, below exponential moving average. Decent high probability setup. Me, unfortunately, I was not focusing on shorts here, so I didn't capitalize on this. But you can see larger two-legged pullback, massive push below EMA, resuming the bearish momentum. And this is now second entry short below EMA, right at the EMA great bearish bar. And market continues working lower. So your bias, now you have a break new low. Are you worried or concerned about that this short-term channel has a break new low? No, remember, this channel still needs to get new low, and most likely you're going to reach the low of the day since there's a major bearish imbalance forming. So I'm still thinking that we're heading lower. EMA keeps rejecting prices. Okay, it looks like you had new extreme, but if I'm going to measure, no, this low is still lower than this. So the bearish bias is still effective. And notice, quite a long time without a decent high probability setup. This is what you have to do when you're trying to identify a high probability setup. It is called a high probability setup for a reason. If there was a high probability setup every 5 minutes, it really wouldn't be a high probability setup, because for high probability setup to appear, multiple factors need to align. The context has to be good. You have to have the proper key entry point that is confirmed. The setup needs to be good. The variation with two-legged pullback or confirmation setup, and the signal bar needs to be good. It cannot be congested. So you want to look for these setups that will give you an edge over the market. You don't want to really gamble too much, but trying to find the consistency. So no real way for me to right now capitalize on these setups. Getting a little bit slow and unclear. Okay, break. New extreme for the uptrend. New high for the uptrend. We're breaking lower. Okay. Okay, so now I'm expecting to get a felt second entry long. Bias still remains bearish. First entry long, pullback, second entry long. But it didn't even get a trigger below this bar. It stalled with bearish bar, and it's getting a little bit congested. 1, 2, 3, 4, 5, 6. It didn't even get triggered here. It's still with bearish bar, so I can't really take it. There is a lower high. Actually, it's kind of like a part of the failed second entry long, but it's a little bit too stacked, a little bit too congested. Okay, I'm going to redraw the wider downtrend. I expect for prices to go lower. Zoom back, you can see once again, each new major low is lower than the previous one. So you can see still bearish bias, each new major low. So we expect for prices to continue heading lower to reach the low of the day, key level, and for this downtrend to create new extreme. So we can see the bearish bias present. I'm just expecting to get a nice high probability setup. I have a new low, first entry short. So what is the pattern I'm looking for? I'm counting for second entry short. The two-legged pullback. And notice new low, first entry short, pullback, second entry short. We have also small little resistance. Great signal bar. Look how bearish this bar looks. This is a great second entry short. Notice how many times EMA is rejecting here, and rejecting here. So it's a great second entry short. This downtrend is new low. The first downtrend is new low. Bearish bias needs to push prices lower. This is a second entry short to like a pullback. And it ended up being a failure. I actually taken this trade myself. And I was a little bummed because notice this was just a little fake out before market plummeted lower and the bottom fell out of it. So this was unfortunate that you have everything down right. There's just little fake out. And this is pretty much unpredictable. There is nothing that can tell you that there's going to be a little fake out. Had there been actually a better bar, if this was an inside bar, you could have re-entered on new high, first entry long, second entry long failure. Another confirmation of the resistance. But the way it formed on my chart didn't really allow me to re-enter, because if you're re-entering after losing trade, you really have to make sure you are reading it properly and you're not revenge trading. And if I see such a sketchy setup, it's very hard to switch gears like that after losing trade, because it is very easy to revenge trade after losing trade and dig the hole too large and have two losing trades back to back. So you really want to make sure if you are taking a setup after losing trade, because the fake outs work like this. You can have a nice setup, little fake out, and then chance to re-enter. I've done that, but it needs to form a little bit better so I don't question myself, because the analysis still remains the same. All channels need new low, bearish bias is still present, we still are heading to low today, so I know that we're going to push lower. I just need to find the proper place to enter on the chart. Unfortunately here, it didn't really allow me to sell with confidence. You could have. It's a little bit more aggressive, however. And notice market is finally breaking lower. So now I'm going to mark my new low, because notice we finally, this low exceeded this latest low of this downtrend. So what does it mean? We expect correction or possible reverse. I was even drawing my low today a little bit higher, because this fell a little bit low, and it also combined the fact you created new extreme. So it makes sense to draw it a little bit higher. It's not that big of a deal. Important thing is for you to know that there is some area below the day where prices are heading. You can see there's a reason to price action, how it's moving. So now that I have new extreme, and also notice, by the way, there's a first leg to a new extreme, pullback, second leg to a new extreme. I can actually make this just a tad lower because we have more stims here. So you can see very similar to being a measured two-legged pullback. First leg down, pullback, second leg down. New low. So now I expect what? Stronger bullish correction. I cannot take second entry short now. I cannot take sell just yet. We have larger two-legged pullback, we have new extreme, and this is why I'm using the price action rules to help me identify when the momentum will switch. So we're pushing lower. I'm not going to keep my shortened channel tight like this. I would be keeping it tight if I expected continuation of bearish trend. Everything right now tells me that bearish momentum depleted, at least temporarily, okay? Most likely we're not going to straight up reverse because overall sentiment in the market is just so bearish, especially in higher time frames. But I need to expect the temporarily strong bullish momentum because the correction may be stronger. For that reason, I'm not thinking about selling. And notice what you have. New low, first entry short, pullback, second entry short, failure. Look at the momentum. All the sellers got trapped, going short way too late after all the momentum played out. You reverse so quickly above EMA, and this is how you can recognize the trap. It snapped in blink of an eye, Close above EMA, confirm the wider uptrend. Tier 1 signal bar, this is a great felt second entry short. However, it's almost impossible to catch because if you try to use any level of limit order, you would have been left in the dust. So you really need to be really fast here. This is sometimes what can happen on these traps because all these sellers who are selling this late, they're keeping their stops above these bars and it just takes them out and all the buyers will take advantage of them. So you can see this is why the market shot up so higher. And this is why the market kept slowly but surely working lower. And now that the new low was made and the low of the day area around that was reached, there was a stronger correction. So we have another overshoot. I'm not really sure now what to expect. Possible reversal, perhaps. I'm just going to follow the short-term channel. We still keep creating lower lows. And notice prices keep pushing. Well, look at this. Okay. So now that you have so many matching lows working lower, you may start to already feel there's another pattern working. Because notice, push phase, correction phase, push phase, correction phase, and you may end once again and start the push phase. So there's a possibility for you to locate this flatter brand new pattern. And it fits this local price action pretty well. You had a two-legged pullback to start the channel and the push phase, pullback, correction phase. So if you have this channel in play and the overshoot allows you to expect stronger bearish momentum, notice what you have. Lower high, all the bulls got trapped. You don't want to be going long definitely because you have overshoot, so you expect stronger bearish momentum, just like when we had overshoot during our first channel. So you're definitely not thinking long here. There's overshoot, so expect. You can see how far away from EMA it pushed. Steep push up, 90 degree. It's gonna get corrected. You can see so many matching highs here, possible channel. A nice tick higher, reversal down, lower high, confirmation setup, because this is kind of like a smaller congestion. Excuse me, lower high breakout pullback. It acts that way. You can think about possible engulfing. This entry, however, the bar is too big, so this is mainly marked when it comes to context, because next time you will see the setup, it may be a little bit smaller. I'm marking it based on the context because multiple factors are being combined, and there is no failed second entry long to follow, unfortunately. Okay, market keeps working lower. We actually have tiny break in a new extreme. Right here, break new low and a break, another attempt to create new extreme. Okay, we're correcting. And we have second entry short. Now this may be tempting setup, but notice once again what's happening here. First of all, you can see it's definitely getting a little bit more sideways. But look what is happening. You have a push phase, correction phase. So there's a push phase. And there's a correction phase. Right here, push phase right here, correction phase here, and push phase down right here. And you can see every single time the push phase will get depleted, the strong correction phase will follow. Push phase will get depleted, strong correction phase will follow. Push phase will get depleted, so there's a chance for correction phase to follow. For this reason, you can't take short. For the same reason it happened right here. You can see this is how the wide and broad weak downtrend acts. Every single time you're just bouncing at these lows, and you're bouncing at the low today as well. So you want to be a little bit careful here, and you have potential small break in your extreme. So you don't be going short just yet. Market reverse. You can't take long because here it was above EMA, here it's still below. Very hard to go long here. And market keeps pushing. Now you have big lower high. Now this is tempting, but there was no bullish setup bar. You're selling quite low. At the low of the move, quite aggressive. Okay, and notice the bearish bias keeps resuming. Okay, so the downtrend is getting quite strong. I cannot sell. Everything is at the low of the day basically. I cannot really sell at the very low of the move. Bullish signal bar, can't sell. Okay, can't do anything. Too low. Everything is too low for me. Nothing is correcting much. This is fell breakout out of this congestion. Fell breakout, but the signal bar was bullish. This actually would have been pretty decent setup had there been a better signal bar, because Kind of like a breakout pullback, EMA holding, fell breakout. Just horrible signal bar. Okay, and notice what we have. We technically have micro level bottom, but this looks very similar as a failed second entry short. And once again, notice already the similarity. You have another push phase, so what you're expecting, possible correction phase to follow. Just like you had a second entry short failed, second entry short failed, second entry short may fail. So this is very tempting setup because you're getting quite close to bounce from the bottom trend channel line. Every single time, notice where the push phase ended at the bottom trend channel line. So you're expecting once again a little bit stronger bullish momentum. Remember, this is weak, broad, flat downtrend. You cannot be too aggressive. Like if you are trading a very strong trend. Very strong trend would have minimal bullish pullbacks. Look how strong these bullish corrections are. They're very strong. So this is indication to you that this is a weak downtrend. And generally during weak downtrends, you can't be selling too close to lows. You need to wait your turn till the market corrects, and then the high probability setup will be somewhere at the high. So you can see you waited it out, pull back, lower high. If it performed a little bit better, would have been great. So here, you know, this is a decent setup, but more aggressive because it is technically just high low. I like resetting the count when there's a micro double bottom, but had there been legit failed second entry short, definitely decent setup because it is right at the EMA, great signal bar. You can see the strong momentum it generated. I even draw my channel a bit wider because I expected quite a strong pullback. That didn't happen. Notice how far the market pushed lower. It completely retraced the entire correction. Notice the low of the day once again coming into play again. And after I see this, I no longer expect new high. The resumption of bearish momentum is happening again. And notice what we have. Repeat pattern of what we had right here. Failed second entry short, push above EMA, push below, lower high. Failed second entry short above EMA with outcome reset, push above EMA, push below, lower high. So this is a great high probability setup. The market keeps working lower, keeps hugging this. Everything is too low potential overshoot, and I believe it's too late now at this point. Yes, the beginning of today's session looked very promising because the trendline rule applied perfectly. The key entry point was easy to identify. Everything played out well. Break new low, break new high, setups at the bottom, setups at the top here. Everything so far aligned perfectly. Break new high, reversal nicely. It looked like it's going to be a very easy day, but eventually market really didn't offer that many setups and it just chopped lower a little bit. And unfortunately, I took the second entry short myself. So one of the few actually legitimate second entries, and it ended up being a losing trade, unfortunately. But overall, quite predictable push phase and correction phase down here. And you can see there's a reason to price action movement. It's a language that you just need to learn to read and to follow, and more importantly, not to pull the trigger if there is no high probability setup, because there is no high probability setup on the way down. Just a first entries, and everything is far away from the EMA. So I hope you had a decent trading day. I'm gonna wrap it up. I'm gonna talk to you next time. Take care, buddy.